Welcome back to Soulful Academics, where I teach you guys how to budget, save, and invest. Go to soulfulacademics.com to free up debt to build generational wealth. Make sure you copy the latest Bitcoin to the Moon t-shirt. Let's get straight into the video. As we see, the market's currently at a greed, with a 58 out of 100 being extreme greed and a 0 being extreme fear. So we got the market down to at least 58. From last week was at a 65, and I told you guys if we can get the market down to neutral, down to between under 50, be a great sign. Damn ass. But if we get the market down to an area of where there's fear back in the markets, this will be a great entry point for us people who already sold off our profits from last month. May be the best month since November 2023. And now it's a great way right now to continue looking at the markets. As we see, it's a very choppy. We don't have a lot of momentum towards upside or the downside. It's just been in the consolidation or range. But if we can see a big breakdown towards the bottom, like we seen Tesla today, we can start really putting the efforts into buying our favorite assets again. Let's take a look at how the overall market did today. We're seeing Bitcoin fell down at least 3,700, at least 3.5%. Bitcoin had a huge drop these last 2 weeks, and this is a great sign after we seen Bitcoin run up very strong these last month, but May and April. We're seeing that Bitcoin is starting to correct and retest and break down to the downtrend so we can get a nice little dip. Okay, this is a nice entry level for people who missed the rally from 70k to 100k, but this is a good entry point for Bitcoin investors, and this is where you want to start averaging. Once we break down below 100,000, this is a great opportunity. I'm glad that the markets have these type of cycles. We have a huge run up where price goes up very high until a point where it's not affordable for a lot of investors. Then we have a retest or a correction where the market drops down below its previous high, so investors can get back in there, buy the dip, and then continue in the high, or maybe stay in consolidation for a long time for you to dollar cost average. Bitcoin right now, macroeconomics is looking like we're gonna have job reports tomorrow. I do see Bitcoin recovering like always to push towards 150k this year. Always make sure you're looking at Bitcoin to see how the overall market and the economy is doing. And right now, Bitcoin is staying strong compared to technology stocks and everything else. I like how Bitcoin is always one that you can use to hedge inflation. You see a lot of companies like GameStop, MicroStrategy continuously buying Bitcoin because we see days like this. Okay, you don't always want to see Bitcoin push up too much just because you're missing the opportunity for you to buy it. You want to see, if you want to buy Bitcoin on days like today, we see 4 or 5% drops from its all-time high, and Bitcoin is just staying near its all-time high, guys. I mean, even though we see a 40-30% drop in the last 3 months, we see it quickly recover within a month or two. If you can start dollar cost averaging into Bitcoin today or this month around the $100,000 to $110,000 range, you can make a 40% return once Bitcoin pushes to $150,000. Like I said, you always want to buy an asset. No matter how much you think the asset's too high, think about it as the next 10 to 20 years as Bitcoin supply limits and it gets out of so scarce, just because the $21 million supply that was made for Bitcoin whenever it was made by Nakamoto. Okay, now we always want to look at Bitcoin and its purpose. Bitcoin was meant for a P2P network for you to send money in a transaction with a person with an address wallet and another person with an address wallet across the world, so they can send money directly without a person in between to look at the transaction and confirm it, or a third party entity looking at the transaction. So now, whenever we have these type of transactions being made, we have people on the blockchain network that confirm these transactions. Ethereum is one of those that's actually been staying strong these last few weeks, and we see it around this $2,400 to $2,700 range. Ethereum is another great one behind Bitcoin to buy, as it has limited supply, but then again, we have Ethereum as its backbone for decentralized apps that was made behind Bitcoin, so it can have a way of applications. Ethereum is still near its all-time high right now, compared to being in this last low of $1,400 in April, and it's just been in a nice little correction right here, but we haven't corrected too much below 2,000, and that's a great sign of strength near support level where price doesn't break below a certain price level and it's staying above it. That's a huge sign of buyers coming in and stepping in. And we like to pay attention for Ethereum for the next 6 months. If we can dollar cost average now to Ethereum, we can continue to pay off debt in a big lump sum for no matter what it is. It's a house loan, no matter it's a car payment, no matter it's a student loan. This right here, one crypto can make you set yourself apart in an amount of 6 months to get yourself out of debt. Okay, so we just got to pay attention to one of them. We just got to put that discipline and consistency into one of them, and Ethereum is going to do that job for you. On its rate of how much it moves, this is all you need to put in dollar cost average. No matter if it's $100 a week, $1,000 a month, $500 every 2 months. You gotta come up with a habit that's good for you in the way that you like to see yourself grow. This is gonna make sure that you get that 40% return on investment. MSTR is one of those crypto stocks that's staying strong around this $400 to $360 range. I mean, we've seen MSTR down at least 2% today at $9, and it's already been choppy these last few weeks and months, but it's been having a huge run up lately these last 3 months. I want to pay attention to as well as Bitcoin, just because it continues buying Bitcoin and adding it to its balance sheet. So the more Bitcoin it has, the more risk it has into the cryptocurrency market. So it moves and matches the Bitcoin type of market. And we've seen that MSTR is one of those that's staying strong. Even though Bitcoin has a nice 10% dip, MSTR really haven't had a big correction. So if we do see a big move towards the downside, that's an immediate sign to get into this one right here. If we can see it go down to $340, $320, maybe even $280, and there might be a likely chance that it could happen, but just be prepared if we see that move down there. Drop everything and you want to enter, put in some call options and buy some shares, and just load up on the stock in general. Just because we got to push up to $500 this year, so anything below this level right here is a guaranteed screen buy. And I like how MSTR is actually not as risky compared to these other cryptocurrency stocks lately. I mean, we have it in the uptrend ever since May and April, but we now have this stock in the area of support and correction. Now, if we buy right now, it'll be less risky than us buying it at $400. Coinbase as well. Coinbase is at $239, and it fell about 5% today, $11. And Coinbase is one of those real volatile cryptocurrency stocks. I mean, we might see a $40 to $30 drop one day, and then we might see a $50 to $60 gain the next week. Okay, so this is just one of those volatile cryptocurrency stocks. I like how these last 3 months, Coinbase had a phenomenal rebound after touching $170, and now we got it back to $239. We have way more room to go up with Coinbase as the demand for cryptocurrencies and we get more users on the platform. I can see that this company going to $400 at the end of this year. So if we can dollar cost average at $240, we can get a 35 to 40% return off investment. And this one is one I like to put calls on. Just the amount of volatility is I can put a call for this one for about $3,500 to $5,000, and then easily just make a $8,000 to $12,000 return off investment. And this one requires you to be more patient. But once the train takes off on this one, you don't want to be left behind. We can't talk about Bitcoin stocks without mentioning GameStop. GameStop announced that it bought $500 million worth of Bitcoin, and this is a great sign for GameStop's company, the one that was near bankruptcy at one point, and it got turned around by a bunch of retail investors who pumped up the stock, and they believe that this stock has potential. One person who made a tweet and a person who showed his big investment in the company and interest into it, did his research, and now the company is still buzzing. We see that GameStop is having perfect technicals these last 6 months. GameStop touched $35 last week, and we got it down to $29. Compared to the rest of the stock market and Bitcoin and volatile stocks, GameStop is actually sitting real nice at price where it's at. I mean, we got about like 4 to 5% down from its recent high, and now we continue looking at GameStop. It's actually a less riskier stock compared to all those other stocks that are down 20 to 15% now in this correction, are very trendy, very choppy. GameStop is always one of those that doesn't go down too much compared to its competitors, just because it's already low. People already bet against this company and shorting it to go to zero, so you can't really lose much buying GameStop. So that's one thing you want to keep in mind. And you also want to keep in mind with GameStop, it's actually putting great business moves in play. So just because it's buying assets, it's cutting debt, and they're creating new markets for itself, like entities and inside the cryptocurrency market, besides gaming and physical copies and trading cards. And then we see that this cryptocurrency and Bitcoin is going to allow itself for this company to really innovate toward the blockchain and that new sector of technology. Keeping an eye on GameStop. Right now it's at a $13 billion market cap. Once this stock starts to push out and really break above $35, look for the market cap to push above 15 billion to 20 billion. And then once the short squeeze really starts taking off, I do see a huge move past $40 in order for a short squeeze to really start putting itself in. Nike's one of those great stocks that have nice growth, not as risky compared to Tesla and Nvidia and these tech companies, but also provides you nice growth. If we look at Nike's past historic profits and its earnings, we see that Nike's hit on almost the last 5 of them, but yet the company is undervalued. It's sitting at $62 a share, and that's a great price right now for Nike. And once we've seen Nike trading at least $120 the past 2 years, and last year Nike was about $80 a share. So we're seeing that Nike's is getting in this nice little range and this nice little downtrend these last 400 days, and that's a long time for a stock to be beat up. I like to get those stocks that have been beat up the most and that beat up the longest. Okay, I like to get those domestic stocks that's been beat up. Now we continue buying these stocks just because the more beat up the stock has been, the more profit we're able to get long term, and once the company rebounds and the market rebounds. So if we can take a look at Nike, it provides its investors 45 cents a share. So that's a great dividend investment for investors just because the stock is only $62. If you can buy $10,000 to the company of Nike and you can grab at least 100 shares or 50 shares, you're going to get at least 42 cents every share you have. So now you're going to make passive income. Not only are you making passive income from dividends, the stock is going to rebound and go back to $120 as well. So from 60 to 120, that's $60 a share as well. So now you have 2 ways of source of income from just buying Nike. And we know Nike past technical and fundamentals that Nike's been around since the 80s and the 70s, and this is once been on the stock market as well. So based off that fact that Nike's been in this huge uptrend, if we zoom out to the all-time markets, Nike's been in the uptrend since the 80s. So now we have historic data that Nike can't go down too much where it won't be able to recover and become bankrupt. We just got to pay attention to Nike and the Dow Jones. If we get a huge push towards the markets, Nike's going to recover and you're going to be profiting to make the best passive income that's possibly out there for you. Now let's go into the headline stock, the stock that made the biggest news today, Tesla. As I see from the title of the video, Tesla fell down 14% today and it was down $47. This is like the most beat up domestic stock I ever seen in my time as being an investor for the last 5 years. Okay, now we've seen that Tesla had this horrific day that's due to Elon Musk, the CEO, and Trump having a backlash on the internet. Okay, they're talking amongst each other and they became best friends at one point whenever the election started, and now it came to a point that Elon has some things to say about Trump's decisions as him being president, and Trump has things to say about Elon. No matter what's going on with these two, as we pay attention to the technicals, Tesla is right now having a correction, and this was going to have to happen if Elon opened his mouth on the internet or Trump said something back to him. Regardless, this was going to have to happen because Tesla had a huge run up this last month. Okay, and like you guys who watch my videos these last 6 months, every time the stock has a huge run up towards the upside and the stock is pumping higher, making higher highs and higher lows, we see the stock has to have a huge gap down and even a bigger gap down to the downside, just like it did towards the upside. The same what mechanism has to go vice versa towards the downside. So now as we see, Tesla did that. So if we look at the 1 year time frame, we're seeing that Tesla actually had this technical that warned people that Tesla's gonna drop down. So either you're ready for the drop or you're ready to buy more or sell your position or take your profits. just get ready, because it's gonna happen. This is right here what I like to call a head and shoulders pattern. So what a head and shoulders is, whenever we see a left shoulder on the left of the chart, and then we see the head, meaning it's the highest position on the chart, the highest high, and then we see on the right, which is the right shoulder, it didn't go higher than the head. So as we see, we got the left shoulder, right shoulder, and the head right here. This is a market pattern. Whenever we see a huge downside, is going to come once we see these type of mechanics right here. Right now we see the head and shoulder pattern, and then it goes the big drop towards the downside. And this is the move you want to anticipate if you're betting on the stock going down, like a lot of people anticipated on Tesla today. And then this is what happens whenever the stock cools off from it being in a huge uptrend. You always want to pay attention for the head and shoulder pattern from an uptrend, or whenever we see trend reversals. So right now, trend reversal could happen for Tesla, or it could just be a sign of correction. But based off this head and shoulders pattern, we're seeing that this stock is going to have some downside on the way. So, and that's what happened these last 4 days. Tesla has been in the downside the last 4 days, closing towards its lowest. Okay, and now we can take a look at Tesla in the next weeks ahead of us. Tesla can have a way for itself to rebound after this head and shoulder pattern. Head and shoulders patterns is a great sign to look for once the stock market's at its highest, and then whenever we're trying to see a reversal towards the downside. And now we see anticipated that Tesla's already finished or did this downside. It could be more downside based off more economics, macroeconomics, but for right now, this is a flashing sign for investors to buy Tesla. I mean, this is not the best sign. Like I said, in the last 5 years, I've seen the drop in one day. This is signals that people tell people, guys, buy me. We've seen the market cap for Tesla being in at 1 trillion to go back down to 900 billion. And then they like to headline it, Elon Musk is lost his #1 title of being the wealthiest person in the world, or he lost his company from being in a $1 trillion market cap, or he might lose his position in being in the FANG, the top tech company. Whatever headline they like to name it, no matter what, the data is right in front of us. The signs don't lie to us. The signals won't hide from itself. It's right in front of our eyes, guys. Tesla is right now showing us buy me while we have this nice little uptrend that started in April 2021 from being in consolidation, and then broke out of that consolidation and had a huge run up in May. And after you know there's a huge run up, we're gonna have the huge downside. And that's what we had these last 4 days, guys. No matter what's going on with Trump and Elon, I continue to let them do what they do on the internet. I'm just paying attention to the technicals as well, how this reacting, what's going on from the fundamentals in the news. I like this sign for Tesla, guys. And I always like whenever there's huge gaps down real fast in a short amount of time. Just because those gaps down that happen so fast, it has to be a gap back up as fast as well too. So this is how thing is called volatility. Once you master the skill of volatility and volume in the stock market, and knowing the market cap and how it influences the stock price, then you can put data and analytics together to make educated decisions so you can lower risk and make better investments. Now we know that Tesla, after having this huge downside, we know that Tesla is actually expected to report earnings in July 28, 29, once we also have another Fed meeting around that day too. So we have huge signs that Tesla's gonna have a phenomenal summer, and this right here just started that spark to a summer rally. A downtrend or a huge downside sparks a rally, and right now Tesla is flashing signs to investors. Guys, we're just getting started. So I love this move from Tesla. I'm gonna pay attention for this stock because this is my brethren. This is the one that is the most volatile stock in the stock market for me, and how I like to trade and be patient in order to make my moves. And if I can put a leap right now at 284, anybody investors thinking about putting calls on, I will wait for Tesla to fall as low as $250 to $270, $260 range. Anything in that range just be a great price for Tesla for you to put a long leap to hold till January for $400. Another one of my domestic beat up stocks I like to buy is AMD. AMD is one of those stocks that have been around since the 60s. That's because the company was one of those first CPU and semiconductor stocks that's been around behind Intel, and it has tons of experience just being in the technology sector. AMD is going to be one of those stocks that really push itself towards this AI race, as well as CoreWeave, ChatGPT, and Microsoft. Okay, and we pay attention to AMD and what its role in AI. AMD is one of those that support this hardware, and they actually do the support for the AI systems to work, and all that machinery and the amount of data and the speed and the cooling systems for it in order for AI to run. And as we see, AMD is still down its last 365 days. AMD is still showing signs of huge support and strength around the $100 range to $120 range. Anywhere between $150 and below is a great price to buy AMD. As we push up to $230, its all-time high this year. AMD is one of those stocks that take time for it to really form out its pattern and bottom out. And when we say what bottom out means, bottoming out in a stock means finishing the bottom of the stock in order for it to reverse towards a downtrend, start ranging out in a consolidation, being choppy, and then we have a point where price hits a point and then it starts going in the uptrend. And basically change it from a downtrend, being in a range, no higher highs or no lower lows, and then boom, a uptrend, meaning higher highs and higher lows. Okay, and whenever we see in the stock bottoming out, it could take a long time. It could take years, it can take months, sometimes it could take weeks. It depends on the stock and how much market cap it has, and of course macroeconomics. And whenever I talk about AMD bottom out, AMD's already bottomed out. We see AMD's bottomed out between March, April, and May. And once we seen AMD break out to $122, it confirmed that it bottomed out. Once we seen it pass this area of resistance, $115, it broke out of it, and then boom, it made a new support level, meaning buyers are buying in this area, and it's a floor that it didn't break below. That is support. Resistance is the roof where price hits, where it breaks out of, to make a strong signal of buyers breaking above higher highs. Okay, and as we pay attention to AMD right now and it's finishing its bottom, all it takes is the next 3 quarters for it to have strong earnings in order for the stock to really rally and push up past $200. It's currently down 48%, and it's actually down the last 434 days, $109. So this right here, if you can put on some multiple call options that expire in June 2026, that probably cost you about $2,000 a contract or $1,000 a contract, you can make about $10,000 per contract you have. So easy, if you can get 10 of these, that's an easy 100K challenge that you achieve right there from by investing in about $10,000. This one right here requires patience, guys, just because, like I said, it's on that merge of already bottoming out, but we just need to get this uptrend started. And once the uptrend started, we're going to see gaps of where AMD opens up high and this continues higher from these strong earnings supports, guys. And whenever these earnings come, this is backed up by the government, guys. I'm giving you guys the tea, the game, okay? Make sure you hit that like, comment, subscribe, just because AMD is getting funded by the government, guys. They haven't told you, then I'm telling you myself. AMD's backed by the government and getting funds so they can push AI and really invest into the technology and research of AI systems. As y'all know, the government is huge on AI and technology, just because it's just what's going to be needed for America to innovate towards the way it has its picture and its plans compared to China. And they're in this huge race, and who's going to really get the best AI systems for its consumers, okay? And now we can see that advanced microchip is one of those factors that already has a huge experience in technology that's going to push this race out for them. Keep an eye on AMD, price target $200. We got a market cap of about $100 more billion for AMD, so we know this stock is volatile. Keep an eye on the volume as we start to hit these next quarters of earnings. And like guys, I like to know I like my favorite stock as well as TQQ. TQQ is one of those stocks that buys these big fortune tech companies like Nvidia, Microsoft, Google, and it's all those big tech companies in one stock. It's actually an ETF. Okay, an ETF is a less risky stock that's provided for investors so they can have a nice growth portfolio. And that doesn't mean that it's less risky, but it's actually more volatile compared to the other ETFs just because it has these tech companies in them. And we know that tech consumes risk just because when the 2008 bubble, the 2008 crisis, the dot-com bubble, and all these different bubbles that happened in the past, technology is one of those that just pretty much takes over the economy. And this is one that's really volatile, but not as much compared to other stocks. You can make some nice growth, especially how you play it. If you can load up on shares with TQQ, these last 3 months I've been telling you about this stock, guys, we seen it at $40. We seen this stock go down to $38. Now it went back to 72. So people already got their 100% return. And that's why I like to tell you guys about these stocks early. So make sure you keep watching and staying tuned so you can get and start building wealth with our channel, and we can start building wealth together at Software Academics. It's already at $72 a share, but price target is not done yet. So if you already think you already missed the move in the rally and you're just checking out these videos, TQQ got room to push up to $100 this year. Okay, that's where its all-time high is. We see that TQQ on the right is only currently at 72, but if we zoom out, TQQQ was about $90 and around about $98 in December, and we got more room to push up, as well as NASDAQ. So if you want to look at the index NASDAQ, this is pretty much the same thing but lesser value. So you can buy multiple contracts for TQQ compared to buying the contracts for NASDAQ index options, which would cost way more thousands than TQQ. TQQ will only cost you about a couple hundred to $400 to $500 per contract, and you can get a nice expiration date with that amount of capital as well. So I like this company just because the leverage that you can use buying TQQ, you can really increase your margin if you can play the rule right. Whenever this stock was rebounding, when it hit $38 around April, and you held it, now you continue buying every time the stock is down. The stock doesn't go down more than $3, $4, and if you do see the stock falling more than that, like we seen start the year off, this huge gap down, guys, that is life flashing signals to buy, guys. Whenever we seen this last 3 months, guys, whenever stocks were having this huge crash due to terrorists, people were feared, there's uncertainty. That's signs of life-changing moves, guys. That's just a way that you can change your financial situation based off how you budget and how you were saving, and you put in a discipline in order to increase your income and living on your lowest means. It's important to the stock market during uncertainty, so you can buy the lowest of the dip. Turn that capital of about $5,000 that you put in, so you can make that turn into $10,000, or you can make that turn into $15,000, and then you sell it again, wait for the next market correction, and you rinse and repeat, guys. This is all we do in Software Academics, and we know that money is not something that we should be stressed about or we should try to idolize just because how easy it is to make money, guys. Like, these videos are not rocket science. This is something that we just pay attention and we just do simple research and we analyze on what it's telling us and we take advantage of it. So TQQ is a great one to add to your portfolio if you want to have some nice growth, even with leverage with options. This is a nice one. And I want to give you guys one more before we go. I'm going to give you guys Wix. Wix is a e-commerce website that allows people to build their own templates and websites, and they can host them on the World Wide Web. And they don't have to have no coding experience. They can have their own designs, own templates, and boom, they have a website. They have a e-commerce website. They have a portfolio, whatever it is they need. I have one of them myself. So this one is so simple for its consumers that this demand for Wix and the demand for websites and businesses depending on Wix is just going to expand. I mean, we're seeing that Wix is now almost one of those large cap companies. We can see Wix pushing up past $200 this year, as it was sitting around $180 $192 around in May 14th or May 15th, and then we had a huge gap down after some earnings. The stock went down to actually finish this double bottom. Now we see that the stock is continuing to trying to push back up from after hitting $146. More of the story is Wix is at a great price right now. Like I said, get those stocks that are beat up, the one that's not really matching how the index of NASDAQ technology stocks in the S&P 500 is looking like. This one right here is going to have a huge run up. Every time I see Wix looking at my stock movers, Wix is always one of those that don't go down too much, but it has consistent green days of up 2 to 3%. And you know those 2 to 3% gains a day ends up being a 10% a week or 20% a month. So these numbers starting to add up every time we see consistent wins for the stock of it closing higher than it opened. And that is a great sign for Wix. I actually like how Wix is very volatile compared to a lot of the stocks. And right now it's just flashing for it to buy. Since January 2025, Wix was at $230 during the new year. January 25 is a great sign. Wow, the stock really did tumble a lot, and it first has to recover from that move alone in order for it to push up towards its all-time high, which is in February 2021. Guys, Wix, Tesla, AMD, TQQQ, these stocks are great ones added to your portfolio, and y'all know that you just need to pick one in order for you to escape that rat race, in order to make your family get out the hood, guys. It only takes one of these moves, right? It only takes one decision consistently over time for you to change your life. Don't even think it as just gambling. Gambling is making uncertain moves over time without you knowing the outcome. And compared to consistency is you making the same decision over time and you knowing the outcome based off the amount of times that you put in. 2 + 2 = 4. Guys, I love the way Wix is looking, and I'm even gonna start looking at some call options for this one with a strike price about $170 to $150 and with an expiration about June 2026. And I'm gonna at least spend about $4,000 on a Wix contract, about $2,000 to $4,000 for a good contract. And minimum, I'll at least put $2,500. You want to make sure you get those contracts that are going to be in the money. In the money is whenever the option contract is going to be able to profit based off the direction that the move is going to be. Whenever it's a call, in order for it to be in the money, it has to be going up higher than the strike price. So if I get $150 strike price and in order the break even price is like $160, Wix has to climb above 160 for the contract to be profitable. And every dollar it goes up above $160, I'm gonna be making $100 every dollar it goes up. So that's what in the money is. Out the money is gonna be basically the stock is going the opposite direction of where the call is, which means going down. So I'm betting on the stock going up whenever it's a call. I'm betting on the stock going up and the stock is going down below $150, well, at the point I'm losing money, so therefore the contract will be out the money. You always want to start out buying in the money contracts if you want to have a less risky investment strategy compared to buying those way out of the money contracts. In the money is a good way for you to consider your risk and expiration dates that are way ahead of time than compared to expiration dates that expire this week or next week or a few following weeks after. Okay, you always want to make sure you have a good amount of time for your contracts in order for you to have the patience and the bottoming out of that contract and the extra macroeconomic risk that comes with the stock market. So you always want to play those parts effects whenever you want to buy options or you want to make your investment decisions. So that's it, guys. I always want to make sure you guys are making the best ways that you can take advantage of this investment strategies. And we're going to make sure to keep an eye out on Wix. And that's going to be it for this video, guys. I hope you guys learned something new. Make sure you like, comment, subscribe, and share this with somebody that you want to see doing good, that you love. This is videos that's going to be able to really straighten that relationship you guys have. And it can really spark up some conversations between what you learned today and really sharing it with people. This is a videos that you can share with people and make sure that they get the knowledge so they're not left behind from these rallies or these investments, so they can start helping support their families in a way easier way than how they're thinking now. Okay, guys, I want to see you guys in the next one. But remember, guys, always remember that you matter. And first, at the end of the day, materialisms, money, nothing, these things matter. Cars, items, none of that stuff matters. But the only thing matters is the relationships that you have with people, the things that you left behind, the love, the amount of knowledge that you left for people. These things matter, guys. So that's why I come on here, guys, teaching. And I really like how you guys start paying attention and you guys getting feedback and asking questions. So if there's anything that you guys need, let me know. But other than that, guys, keep building strong relationships with people and giving out good deeds to the world, guys. Because at the end of the day, things like this, no matter, you can't take them with you. Materialistic things, moth and things rust at the end of the day. So assets that we so-called try to push towards and the American dream and push towards every day, it doesn't matter, guys. The only thing that matters is your eternity. So love y'all guys. Have a good one. We out.